share my thoughts on Bitcoin's price movements and how these changes affect our ideas about money. Recently, Bitcoin's price moved quickly. It dropped from about 98,000 to 89,000 and then climbed back to 95,000 in just one day. Such wild swings may seem unnerving, but they also create opportunities for those who understand the market's nature. Investors often get caught up in panic when prices change quickly. Some who thought they were on the right side of the market end up selling in a hurry, only to buy back in later. In many ways, these rapid changes have made many feel as though they experienced a great deal of stress. Imagine living through hundreds of days of worry in just a few days. I do not plan to sell my Bitcoin. Instead, I want to take advantage of its volatility. When you learn to think in Bitcoin terms, you see that its constant ups and downs are not a problem, but a built-in feature of the system. Volatility gives Bitcoin its edge over more stable investments that may not offer such opportunities for big gains. Instead of fearing the swings, you can learn to embrace them as a natural part of the digital currency's behavior. One of the key moments in Bitcoin's history came in 2024. That year, the SEC approved Bitcoin as the first digital commodity in history. This decision meant that for the first time, Bitcoin was recognized officially as a commodity. At first, fair value accounting for digital commodities was optional. However, by January 2025, it became mandatory. In addition, experts expected that a regulation known as SAB 121 would be repealed by the Trump administration. This repeal opened the door for every major bank around the world to handle Bitcoin. For many decades, companies could only hold their assets in things like real estate, gold, or bonds. Although bonds are liquid, they rarely beat the cost of capital when compared to other assets. When Satoshi introduced Bitcoin, it took many years for people to realize that it was not a passing fad like tulip bulbs. It took even longer for governments to accept Bitcoin. By 2025, the financial system had reached a point where banks would likely work with Bitcoin instead of banning it. For companies that are publicly traded, this change means that there will soon be a choice between financing with Bitcoin or using traditional bonds. Bonds have often given a negative real yield, while Bitcoin has shown a real yield of roughly 45% over the past 8 years. Even if Bitcoin's performance were to drop to match the level of a standard market index such as the S&P 500, having a digital asset with these characteristics is still better than using bonds. The big idea for corporate leaders is that they can eventually recapitalize their companies using a Bitcoin standard rather than the conventional US dollar standard. This shift would change a company's image from being seen as unattractive to capital providers to being a magnet for investment. When a company can show returns higher than those of the S&P 500, it naturally attracts more shareholders and creates more value. Let's look at an example. Suppose a hedge fund claims to return twice as much as the S&P 500 every year. Many investors would eagerly hand over their money because a strong performance naturally attracts capital. On the other hand, if a hedge fund consistently underperforms by even a small amount, investors would quickly pull their money out. In essence, you either attract money or you don't. I work with many wealthy families from around the world. Families in 47 different countries. These families often do not fully trust their local banks, governments, or even their national currencies. They are aware that in the coming decades, they might need to move their wealth across borders. As a result, they come together to decide where to safely store their money. Imagine if someone claimed to run a perfect bank. Suppose a higher power offered to issue a coin, let's call it God Coin, with a fixed supply of 21 million units. They would promise to transfer these coins instantly between people and store them safely for a very long time. In such a scenario, everyone would flock to this bank because the coin would be a perfect store of value. It would be better than gold, diamonds, or even rare artwork. However, since nothing so perfect exists, the next best idea was to create a digital bank. Computer programmers and engineers worked together to build a digital network that would work in a similar way. That digital bank is Bitcoin. Bitcoin has a fixed supply of 21 million coins, and it is managed by a network of computers rather than a central bank or government. The design means that every person on the network can run the same software that checks everyone else's activity. If someone tries to cheat, they are kicked out of the system. This decentralized method builds trust without relying on any one institution. In a world where each family or even each person could run a copy of the Bitcoin bank, trust in the system becomes widespread. The system is secured by converting electrical power into cryptographic hashes. These hashes make sure that transactions are randomly verified and that it is nearly impossible to cheat the system. With billions or even trillions of hashes in play, no single person can control or hack the network. There are several reasons why Bitcoin is valuable. One reason is that in many parts of the world, local currencies are losing value rapidly. In countries like Lebanon, Venezuela, or some African nations, local money can collapse within a few years. In such cases, having a digital asset that is not subject to the same debasement is very attractive. But there is more to it than just protection from currency collapse. Bitcoin is digital, which means that money can be moved from one part of the world to another in seconds. Imagine being able to send $1 billion from New York to Tokyo almost instantly, any time of day or night. That kind of speed and liquidity is unmatched by traditional assets. The digital nature of Bitcoin also means that it represents a new form of capital, digital capital. Unlike physical assets that can rust or decay, digital capital does not suffer from the same kind of wear and tear. For instance, if I give you $1 billion to spend in another country, you can do so quickly using digital transactions. Meanwhile, physical assets like buildings or even paper money are subject to decay, disasters, or mismanagement. Bitcoin avoids all that. It is like a perfectly designed system where the value remains intact over time. The history of Bitcoin's price also shows its strength as an investment. Over the past 8 years, Bitcoin has grown at an annual rate of about 60%. Even if that growth rate slows and becomes closer to that of a major index like the S&P 500, a 60% annual return is still impressive. In a perfectly smooth world, growth might follow a gentle exponential curve. In reality, Bitcoin's price is volatile. That volatility comes from the fact that people are still learning to deal with a new kind of asset. In many ways, Bitcoin is like water flowing downhill because of gravity. Its natural behavior causes it to move and change. Investors who understand this will realize that capital moves from insecure, older types of assets to secure, modern ones. There is also a financial side to Bitcoin's value that goes beyond simple price appreciation. Its design allows for huge amounts of money to be moved quickly. For example, if you need a large sum, say $10 billion in a short time to make a trade, you can get that credit from the Bitcoin network. No other asset offers such speed or flexibility. If you want to sell something for $1 billion in a matter of minutes, Bitcoin can make that possible. And if you wish to take a long position after someone else has taken a short position, Bitcoin's liquidity makes it a practical choice. This unique mix of speed, liquidity, and global accessibility is one of the strongest arguments for Bitcoin's long-term value. Bitcoin works best as a long-term investment. If you have money you won't need for at least 4, preferably 10, years, consider adding Bitcoin to your portfolio. It isn't designed for daily spending, and using it as working capital can be risky because its price swings can be stressful. And last, Bitcoin is valuable for several reasons. First, it helps protect against the devaluation of traditional currencies. Second, its digital nature allows money to be moved quickly and securely around the world. Third, it marks a revolutionary shift from physical assets to digital capital, an essential change in today's fast-paced world. Although Bitcoin is volatile, that volatility is part of its design and contributes to its advantages. As technology improves and traditional currencies lose value, Bitcoin's benefits will become even clearer. Its ability to transfer funds without government or bank interference makes it a modern form of money that could become a key part of future financial systems. If you find these ideas helpful and want to learn more about the future of money, please like and subscribe. Embracing the changes in technology and finance can help us all make smarter decisions about our investments and our future.